Everybody, this is the higher time frame monthly scan for the Forex market, futures and crypto. So let's have a look here at the most interesting Forex pairs. As always, it's the euro dollar because it's the most liquid one. So the dollar, it looks like the euro dollar, it looks like it's going higher. We've basically two scenarios because the dollar is a typical swing factor. It can go weaker, that means the euro dollar goes up, but overall, over the long term, the next 5, 10, 15 years, we should actually see the dollar getting stronger. So for currently, we've broken outside of this range. We are at the 200. That's the stop on double. We can break it. We can break the big number 120 and we can break the last high. So these levels are magnet levels. We've gotten to this first cluster, big number and 200, and now we might move to the next cluster, putting in a couple of big green bullish monthly bars. So this is opportunity here. I'm rather bullish for the euro dollar. We've got a pattern. We achieved the first target. We might get up to the next target based on the measured move. Let's have a look now. Well, the strongest currency remains the Swiss franc. We have laid out that trade long before it triggered. So this is a pattern. That's an S2 Forex pattern, and it has broken lower, and the stop basically goes here. Well, what is the opportunity? We have to look at the monthly chart. This is a 2.5 year long consolidation on a horizontal line, and this is breaking lower. So we're basically looking now for the market to move lower to the big number, break through the big number, and then even move lower, because this is our momentum move and our target is well down here. So after this 2.5 year long consolidation, volatility contraction, we're looking now for volatility expansion. So big red bars, and that looks quite bearish, as we can see here. So bullish for the Swiss franc, and that goes basically for all Swiss franc pairs. The Swissy is the strongest currency of all of them. Now let's have a look at another euro pair. The euro CAD. The euro CAD is interesting because it has put in a pattern, an S1 pattern that has triggered. So we got the initial scalp move, stop and move, taking out these levels. Now it's coming back to the horizontal line and back to the 200, forming basically a new starting base, right, to move higher. And that's what we're looking for. So we're looking for the euro to outperform the CAD. Let's have a look now at the Swissy. So a strong currency against the US dollar, and we see how it looks like. Very similar to the Euro Swiss. So we've got a year-long sideways consolidation, and we already see here good momentum to the downside, volatility expansion, and we should actually see more of that. And if we zoom out, if we look at the monthly chart, we can actually see that the US Swiss is building bearish pressure all along, and I'm talking about this S1 short pattern since 10 years. And what we see here is a slow grinding, lower lows breaking lower, lower lows breaking lower, putting in another pattern, breaking this double bottom, and it's basically shooting for this very important low. I traded this move back then, and this is when the peg basically came, the Euro Swiss peg of the Swiss central bank, and since then we actually see how the Swiss is getting stronger and stronger, and that is a huge stop run level. And if it breaks, that acts as a magnet. If that then breaks, well, we should see the Swissy go much lower, so much stronger, right? Let's have a look now at another currency pair, the Australian dollar. The Australian dollar has been quite strong, surprisingly strong. We see it best here on the weekly chart, Australian dollar versus the New Zealand dollar, but that stands for the other Australian dollar cross pairs. The Australian dollar has been strong. I'm not sure why, but we're looking at the charts, right? If we look at the monthly chart, well, we can see that this is at an important level. We've laid that out before. We could actually see here that's the stop on level. We could see a swiftly move higher. It has started, well, we should actually see more, or this could just be a test in hindsight. This could just be a test of the level, and from here we could as well equally well break lower. because the odd New Zealand is in a very long sideways range, and this could just be a test, a fake of the last high before this overall downtrend continues for actually a stronger Kiwi and a weaker Australian dollar. So these are really nice charts to trade. Now let's have a look at the US Singapore dollar. This is in a rounding, in a reversal formation. We can see it here, and we see more and more bearish pressure. It's basically confirming what we were laying out back here, that it should move lower. It has put in a new low, a new lower high, and now it has broken the last low. And we are basically here looking for running over these stop run levels for prices for the Singapore dollar gaining much more value against the US dollar. Well, let's move on now to the higher time frame analysis of the futures charts. You have all read in the press probably, surely, that silver has put in a huge move, right? This is a stop run move, and it is taking out this high from back 2011, but as well the high back from 1982 and 81 when the Hunt brothers cornered the silver market. That's a stop run move, and it looks completely overdone. But when we zoom in, we actually see that it is finding support on a daily chart on a horizontal level. That was a huge sell-off. There was a 30% sell-off from silver, breaking this big number. A big important number, $100 per ounce, 30% sell-off, finding support here, bouncing off twice. So we have to see whether we get another sell-off. Well, then we should see prices well below at around $40 to $50, or it forms a sideways consolidation, bouncing off this horizontal line, and actually then there's still the possibility to break to a new high and going higher. Well, the markets will tell, and especially the patterns will tell the story. It looks very similar for the other metals. This is why we are not going there. Let's have a look now at energies. So crude is the biggest contract with the energies, and what we see here is that crude oil has been in a very tight trading range for the last couple of years, and it's basically squeezed in between the 200 moving average capping price and the 21 moving average dynamic support keeping price up. We've got this squeeze. We can see how the bars are actually reacting, respecting those moving averages, and this is a typical volatility contraction, and what comes after that is a volatility expansion, meaning the bars will get bigger. We're looking for big bars, quarterly bars of that sort. Now, this is a trend following consolidation, and which is in line with the super cycle trends. We're looking for for crude to go higher, and that means we should break out of this range and then get to the 100, very important psychological number. And we've got a series of stop run levels here until we meet the last high back here just before the great financial crisis started. We might see that over this month, or it might take another few months, but we see here some bullish pickup, which requires confirmation. Let's have a quick look at the interest rate futures before we come to the US equities. Let's have a look at the ZF future. That's a 5-year T-note. It's here stuck in a range. And the question is, well, it can go both ways. Whenever it leaves the range, it can run either to the upside or to the downside. Well, what we currently see is we see bullishness. This is a bullish pattern. That's an S1 pattern, and it's just here at the Friday close. It was just at an important stop run level, this one, and there are two more levels marked with with gray. And should we develop a bit more follow through, it can go and spike the 200 on a weekly chart, and it can meet the upper range of this sideways channel, and it can even break out and test it, come up to the 200, come up to the 21 moving average on the quarterly chart. So it looks like the interest rate futures are going up, and that means yields are going down, and this is the opportunity basically for this for these next couple of months. Let's have a look now at the US equities, which basically stands for equities, the global equities. The US equities are in a vertical market. You can see it here. Moving averages are fanning out. Means that this bull market is getting stronger and stronger. That is in line with our big picture outlook for the next 10 years, which should actually continue. And intermixed, we've got strong sell-offs. That's a terrorist announcement sell-off. This is the Ukraine war sell-off and consolidation. And this is the corona crisis, March 2020. Yeah, panic sell-off. What is very bullish here? We've got a consecutive green bullish small bars, and small bars like that shows actually bull strength. This might transform into a big bullish bar before then another consolidation comes in, or we might see one or two small pullback bars. Overall, very bullish. Here we've got a 21 touch. Here we have an 8 touch. Nothing looks like this is showing a weakness over the next couple of months. I rather think we might get a big green bar. Well, let's have a look now at cryptocurrencies. We're basically entered into a crypto winter. We are south of the very important Bitcoin psychological number of 100,000. We have formed a bearish S1 pattern that has walked its way through as it did. Currently, we're finding some support at the weekly, but it looks like, and if we look at the other bull runs we had, we're looking for a pullback, a healthy consolidation price for Bitcoin of around 80%, which would bring us price back to the 50, 30 or 50 price level, which is a normal pullback. I've actually marked it here, an 80% pullback, which would come back to this overall pattern, S1 pattern we had here. After this move up, it could just come and test, confirm the breakout level. It's still bullish, and from such a level, a next exponential up leg could actually start. This was our last exponential up leg, and the next exponential up leg should actually propel Bitcoin and other cryptocurrencies well above the 100,000 big number. This was not a stop run move. That's just testing the 100K, and we should see that in the second run that it actually goes to the 150, 180, and even beyond that. So the bullish case is still here for Bitcoin and cryptocurrencies, but it looks like now that we should see further decline. I don't think these are buying prices. It should go lower and basically find a bottom. So it looks quite nice.